Hey, everybody, it's Nicole Benjamin, your host here at Seeking Alpha, to bring to you another episode of our series, Portfolio Pulse, where, as the name suggests, we're going to be keeping a pulse to all the big financial moves that are happening in the market. Now, for today's episode, I am joined by Travis of Dividend Collection Agency. So, Travis, thank you so much for joining us today.
Thank you for having me.
Absolutely. Now, before we get started, our audience wants to know, tell us a little bit more about your investment philosophy, how you got started on Seeking Alpha, anything of that nature.
Well, I kind of keep a simple investment philosophy. I'm a big fan of Warren Buffett, so a lot of readers probably know, but for those that don't, I spent 21 years in the military in the U.S. Navy, so something that I saw with a lot of my peers, a lot of guys would retire or they would get out, and they would kind of financially struggle. So something I wanted to do was not have to deal with that. So that's what kind of led me to investing. I still don't know how I found Seeking Alpha, probably from a Google search, but I found them, fell in love with the platform, and I just kind of went from there.
Now, for the first question, I want to jump in. In your most recent article on Microsoft, we're seeing that, the Seeking Alpha quant system has currently given Microsoft a D- valuation grade. And given that poor grade, what specific valuation multiple suggests that the stock is actually on sale right now?
I think when I produced my article, I think about a week ago, the 4 PE, which is something that I like to look at, was trading around, I think, 24 times. It sits under Microsoft's 5-year average, which is, I think, around 31 times. So for me, high growth stocks like Microsoft, I think it's normal for them to trade over 30 times earnings. And because the stock sits around 24 times, and also the dividend yield is a little higher, which suggests that the stock could be undervalued. Again, it's not a screaming buy, but I think because of the stock's high growth nature, I think the stock is on sale. And because of the investments that they're doing right now to set themselves up for the future, I think it's normal for the stock to trade over 30 times earnings, which suggests that it's a good buy right now.
We're also seeing that Microsoft is pouring a lot of money into AI spending. And because of that, we've also seen a noticeable dip in their cash flow. So with that in mind, just looking here at their overall financial health, how do you decide if this is a smart long-term investment or kind of just something to stay away from that's going to drain profits?
Well, again, like I said, Microsoft is a high growth company. I think if you look over the last 3 years, their payout ratio has averaged, I think it was around like 32, 33%. And I think in 2025, it kind of jumped a little bit to like 34%. But because, Microsoft is a cash flow machine, I think that enables them the ability to kind of pour into it right now. So they're, the temporary dip in the free cash flow is setting them up for the future, because we all know that AI is the future. So their fundamentals kind of allow them that ability to do that, which a lot of companies don't have that.
And I guess, the stock has been underperforming recently, which usually tends to make a lot of investors just a little bit nervous. So why is this negative price action a signal to buy versus something to stay away from? And do you find yourself, taking part in those nerves?
For a company like Microsoft, no. Something that is important for investors to do is kind of manage their emotions, right? You have to trust management. And I think because, again, Microsoft is such a high quality company, I'm confident in their ability to make investments now and deal with, short-term headwinds that'll position them for the future. And as we all know, stock price normally follow fundamentals. So as the company gets back to high growth, the stock price shall rise as a result.
Now, I do see here that in your article, you labeled Microsoft a dividend juggernaut. So despite its low current yield, what metric in their capital structure or their payout history gives you the most confidence that they can maintain this double-digit growth while their consumer segments are struggling?
A huge thing for me that I like to look at is the free cash flow payout ratio. I know a lot of investors look at the earnings payout ratio, but, free cash flow is what drives growth. So I like to look for companies that stay under 30%. I think anything under 30% is great. So I think, like I said, Microsoft has averaged around 33% for the last couple of years. So And also because of their balance sheet, I think when I, during my article, they had more cash on hand than they actually had in long-term debt. And because they have a AAA rating, I think that gives them the flexibility to continue that double-digit growth.
Also to that end, Microsoft remains strong, but their stock price has been sliding. So why do you think there is, I guess, such a sharp disconnect between the forecasting and how the market is actually pricing that stock today?
I think we all know, right? Inflation is high right now, and it doesn't look like it's, gonna go down anytime soon due to the ongoing conflict. So I think it's easier for investors to kind of get caught up in the short-term mindset when the economy is not doing so great. What it's doing great is it's easy to see the positive in things. And I think because of the economy and because Microsoft is spending so much money in a high inflationary period, I think investors are kind of getting caught up in the short-term mindset of, oh, they're spending a bunch now. But in business, speed matters. And I think that's what Microsoft is doing is, aggressively investing now to set themselves up for the future, which again will impact the price positively over the long term.
Well, I guess, considering the current environment and, I know Microsoft is going to be on your watch list. What do you want to see happen, in the next 6 months or even a year from now or 5 years from now with all of these new developments that they have, projected to be participating in?
I would just like to, watch the growth and see. I think, again, revenue has been growing around, 16%, net income and earnings per share around 19%. So I think the investments that they're doing now should allow them to see even higher growth, which, again, will impact the share price. So just looking to, see them exhibit high growth, because as we know, companies do slow down over time. And I think the aggressive spending right now will allow them to continue seeing that high growth for the foreseeable future.
Well, for anybody that's listening in here, Travis, and might be considering Microsoft for their portfolio, is there any key takeaway that, if somebody asked you why you're investing in Microsoft, you would tell them?
As we all know, AI is huge right now. And AI is the future, right? We've seen a lot of companies are laying off. They're using AI. They're integrating AI into their businesses, which tells us that how big AI is. And because Microsoft is aggressively investing in AI, I think it positions them well. I think this puts them ahead of competitors. And I think it's just going to set them up to stay a dominant figure in the technology space for a long time.
All right. Well, we'll leave it right there. Thank you so much, Travis, for joining us today. Everybody that's listening in, please go ahead, click the follow button, click Dividend Collection Agency on Seeking Alpha platform. Go ahead, read Travis's article, see if Microsoft might be right for your portfolio, and we'll catch you here on another episode. Thank you so much.
Past performance is no guarantee of future results. Content is offered for information purposes only. Any expressed views and opinions do not reflect Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank.